Ladies and gentlemen, welcome back to the channel. We have a bit of an emergency upload tonight for all of you. We're getting some news that is causing markets to fall around 0.5% in overnight trading. The S&P and the NASDAQ futures, that is. Tesla stock is down over 1.5%. The issue with this is, one, we've already seen this before in 2018. Like, this exact same playbook already happened before, okay? And it was very negative for markets when that did happen. For anyone that is unfamiliar with 2018, if you are not invested in the markets, it was a pretty rough period, okay? Specifically this kind of area. From December 4th through Christmas Eve, the S&P fell about 16.4%. Now, I'm getting a little bit nervous as I look at the charts today, as I think about the setup that we have right now with, yes, higher valuations. No, not everything is expensive. Value's pretty cheap. Small caps are pretty cheap. Headline S&P and NASDAQ, not so much. But when I think about that in regards to the news that just came out, it makes me more nervous, okay? Now, it also makes me nervous because tomorrow morning we have some pretty big data coming out. We have PCE month over month, and that is the Fed's preferred measure of inflation. We talked about this in the last video, but I just want to point out the way that Jerome Powell dropped the ball this week is pretty clear that PCE is probably going to come in on the higher side, okay? Jerome Powell did not comfort markets at all. He was way more hawkish than anyone was expecting. And the Fed himself, Jerome Powell, has said before, you know, if they have a Fed meeting on Wednesday and they get important economic data on a Friday, they already know what that data is on Wednesday. They get those data reports early. And just judging off of that the Fed got the data early, I'm not super confident about tomorrow's PCE report, and a potentially hotter than expected PCE report is going to be a major problem for markets. So first and foremost, Tesla is currently down about 1.7% here in after hours. If we take a look at the broader indexes here in after hours, the NASDAQ, the NAS, is down 0.68%. S&P is down 0.45%, and the Dow is down 0.37%. It looks like oil's down about 0.5%, and it looks like 10-year Treasury futures are also down about 1 basis point. This is a pretty large move for, overnight futures, okay? If that data tomorrow is bad, we are going to have a big problem. Now, here is the news. No, it's not that Trump transferred all of his DJT shares to his revocable trust. That's not it. Although some people, might like that news or might not like that news, depending on if you're invested in DJT or not. It's actually this news, and it came out at 3:40 p.m., but it's getting further traction today. This is when the story first came out. It was actually updated just 4 hours ago, okay? So it says Trump-backed bill to avert government shutdown fails. Dozens of Republicans vote no. It says here President-elect Donald Trump endorsed a House Republican deal for a 3-month federal funding plan that would avert a government shutdown. Trump and Elon Musk effectively killed a prior funding proposal with their criticisms. The continuing resolution would suspend the U.S. debt ceiling for 2 years and contains a $110 billion extension for disaster and farm aid, which had been a key demand by Democrats. It says here a House Republican bill to fund the government for 3 months and suspend the debt ceiling for 2 years failed Thursday night as dozens of rank-and-file Republicans voted against the deal endorsed by President-elect Donald Trump. So here, just within a couple of days, you're going to see the government likely shut down. It says here, lawmakers are facing a Friday deadline to approve new spending. Okay, so you have literally hours. Okay, now some things will still have funding provisions available for a little while. Okay, it's not like everything's gonna halt all at once coming tomorrow once the deadline is up. But the fact that this bill failed, it almost guarantees that we will have some capacity of a government shutdown. That's a problem, even though, yes, there will be back pay for government workers and all of that. Essentially, they will be fine in the longer term sense. It is not good for the economy, okay? It's not good for the velocity of money. It's not good to essentially not pay people ahead of the holiday shopping season. And there's a lot of other different nuanced things that happen when the government shuts down. But all in all, it's a not great kind of situation for our markets. Again, with the backdrop of high valuations, a Fed that was just very hawkish, and what could be tomorrow morning's data with PCE that may not be as good as we think. Now, as you can see here, the United States federal government shut down from midnight on December 22nd, 2018 until January 25th, 2019 for 35 days. That was the longest government shutdown in history and the second and final federal government shutdown involving furloughs during the first presidency of Donald Trump. It says here, the 2018-2019 lapse in appropriations resulted from Donald Trump's demands for border wall funding that caused a partial government shutdown for many agencies, affecting 800,000 federal employees. Okay? That's a lot. That's an issue. Okay, so you're kind of in the same kind of situation. I mean, you could just do a simple Google search, Fed meeting December 18th article, okay? And, 18th, 2018 article. And you're gonna read that Jerome Powell, basically dropped a bombshell on markets then as well. I mean, almost down to the day, okay? It says here from CNBC, here's what spooked the market about the Fed today. This is an article from 2018. It says, the Fed failed to sound like it was ready to pull back from its tighter policy path as much as markets had anticipated. Wow, I'm getting a lot of deja vu there. The central bank did hike interest rates, but did not remove language in its statement that would imply a slower path for rate hikes. Getting a lot of deja vu there. Fed Chairman Jerome Powell also rattled markets by saying the Fed was satisfied with its program to shrink its balance sheet and has no plans to change course. It's getting a lot of deja vu there. It says stocks plummeted through lows of the year and investors flocked to bonds after the Fed failed to sound like it was easing off its tighter policy path as much as markets had expected. Wow. It says here, quote, I think the market reaction to all of this is the Fed is going to overdo it, said James Paulson, chief market strategist at Leithol Group. How else can you look at this? Then it just smells at a minimum like a really big slowdown in the economy coming, maybe even something worse. Quote, Powell said he sees no problem with balance sheet runoff. That's the one that hurts, said Paulson. There's another potential path of dovishness that he didn't take. And that's it. Jerome Powell could have been more dovish this week. He did not. So let's take a look at December 19th. 2018, the Fed meeting that really, sent markets lower, and markets had been falling again for, days, essentially. You had kind of already been in pretty much a correction at that time. Yeah, the S&P was down almost 10% heading into that Fed meeting, so keep that in mind. Things were rocky already. But if I want to just point out the obvious here, Look at the RSP. The RSP has died heading into the Fed meeting. Okay, same kind of similar setup. I think the only thing that's really holding the S&P up right now, and the RSP is the equal weight S&P, okay? So stocks are getting destroyed. They have been getting destroyed for a while. The only thing that's different now that's holding up the S&P is the concentration in large cap tech. Some investors feel there's a little bit more safety in those areas, no matter what happens with the economy or no matter what the Fed does. So due to that concentration, that money kind of flowing from the S&P, the equal weight into large cap has kind of held things up a bit. But when that dam gives way and big tech starts to reflect what's going on in the markets, you could fall rapidly. Okay, you could see a 10% correction in 2 days if big tech starts to give up the way that other stocks have. Think about Tesla that fell 8% yesterday. What if Apple falls 5%? What if Nvidia falls 5%? What if Amazon and Google and Microsoft all fall, let's say, 5% in a day and the rest of the markets are weak? Yeah, you're going to have a massive problem on your hands. The dam, the levee has just not given way for big tech yet. A lot of big tech names are still sitting near all-time highs. Okay, some of these names are pretty much at all-time highs. That's the question, I think, whether or not we do see that rapid downside. Nonetheless, on December 19th, 2018, the markets fell 1.5%. That was the day of the Fed. The next day, you fell 1.63%. The next day after that, you fell 2%. And then on Christmas Eve, you fell 2.64%. Okay, that's when you see, Trump and everyone kind of revert on their, stance in keeping the government shut down. They funded the government on January 25th. That was a Sunday. On Monday, markets rallied 5%. Okay, and at the same time, Jerome Powell was pretty much being threatened to lose his job, and this is at least when the drama with Powell and Trump kind of started to begin with. And Powell kind of reverted from his prior stance on keeping, rates higher and not reducing the balance sheet as much as Wall Street was expecting. So there's a lot of things that are outright similar, you could say rhyming, with now and 2018. And just, again, following this news today, even a Trump-backed bill did not pass, with dozens of Republicans that rejected it. I mean, that's not good. When you also look at the S&P from a more technical perspective, I mean, you've broken down. Okay, it's official. You've broken down. It's not reflected here because you broke down in after hours. But look at that. You closed right on this line here at about $585.84. But in after hours, you fell to 584.31. So really right now, the S&P, I mean, if you want to look at extended hours, that's fine too, and we can do that in just a moment. But the S&P is sitting about here. So technically, you did break down further, okay? This is a lower low than what we had yesterday. Now, when you get in these kind of scenarios, one, it looks like you have a gap to fill, potentially down to about 576. But you tend to kind of fall to your moving averages, okay? Normally, you don't find support at the 50-day moving average. Normally, at the 50-day moving average, things get worse. Normally, you fall to the 100-day or 200-day moving average if things get really bad. And that's some of the issue. It's kind of much the same way as when markets are going up, they're going up. It's hard to fight it. When markets start to fall and they're going down and you get bad news on top of bad news, it's kind of hard to fight that as well. Now, I'm making this video at night because before the PCE data, because I think if you can understand this before we get that data, you will have a much better understanding of what tomorrow's data actually means. If we get a good PCE number, well, crisis could at least a little bit be averted. Okay, I don't think it's the end all be all. But let's say we get a hotter than expected PCE report. Just add that to the shitstorm that's starting to build out there. And we've been calling out this shitstorm for a while. I mean, the RSP's just gotten utterly wrecked recently. And that's one reason why I'm saying, hey, I mean, we're way overdue for a bounce in the equal weight S&P. But we still have not seen that yet. This is, in fact, the most oversold level on the RSP I believe we have ever been. COVID, you were at 17 on the RSI. Today, we're at 22.52. Okay, so you're getting pretty close to like COVID levels of washout here. Like, that's not good. Now, for Tesla stock, I think it, again, depends on how the markets react here. There's actually a lot of resilience in Tesla as of the last 2 days, believe that or not. Today was a great example of that. Tesla was down over 3% at one point. It ended up doing a lot better into the end of the trading day. But, I mean, if markets give out, and you see big tech give out, Tesla is not going to be safe in that kind of scenario. Now, imagine another scenario where PCE comes in good tomorrow, it's not hot, and the government does come to an agreement to keep things funded. Then I would say at that point, crisis, at least between now and year end, is likely averted. But if we do have a government shutdown, and PCE comes in hot, and we just had a hawkish Fed Powell, and you have the RSP looking like it's looking, we just have a much bigger issue at that point. Now, who knows? Maybe people buy Tesla in that scenario. Tesla has been doing well. Sometimes people flock to areas that have done well, and sometimes Tesla inverses markets. But I'm just not liking the setup here. I really don't like the history from 2018. And almost the exact same thing that's happening today. When the S&P is sitting, I mean, still near all-time highs. Let's face it. The S&P is only down roughly 4% from all-time highs. Even if we go another to like 10% down, you're still going to fall 6% from here. Okay. So I think that's where some of the opportunity is if you want to hedge portfolios, or if you want to use some of that cash I hope you've been saving up that I've been talking about, why you want to, save as much cash as possible. I've been talking about this for months now. It may come in handy here pretty soon. And coincidentally enough, almost exactly a 10% fall from all-time highs would put you to your 200-day moving average at about 550 on the SPY, which really is not that. It doesn't seem like that's that far away relative to the move that you had yesterday, where the S&P dropped $18. You're only like $34 away to the downside in actually hitting that 200-day moving average and getting a 10% correction. So I don't know. Do what you guys want to do. I'm just sharing some things that I think you'll find interesting, and a little bit of a warning. Again, if government shuts down, PC's hot tomorrow morning, that's a problem. Okay, so let me know what you guys think down below in the comment section. Nonetheless, that's going to do it for this video. Have a great rest of your day or night, and I will see you in the next one.